friends, I'm really excited to give you an update of all the crazy things that have happened in only 3 months during Corona for the third quarter of 2020. If you're self employed, waiting for one of those best rates, if you can't qualify for enough, if you've had problems with your credit score, these are all things that you'll want to be paying attention to because some rules have changed mainly in our favor, but some have gone against what's in your best interest. So you got to be really aware of this. Let's get into it. First thing to know that happened the last 3 months is the rates have dropped again and again and again. Last quarter, they were just above 2%. For the most part. So rates have dropped a lot. Now, the caveat here is that you may not qualify for this and it may be a restricted product. So make sure before you jump at a rate, figure out what the breakage penalties are and what restrictions are on that product. Really important to know, but hey, rates, of course, are amazing now. Both fixed and variable, definitely know the difference and you'll make the best decision there. Now, if a lot of people that I talk to, their biggest problem is they can't qualify for enough. The banks especially are super restrictive, and that's not really changing for any time in the near future. So there was a bright spot. You can now qualify for $4,000 more. That may not seem like a lot, but sometimes it literally gets that close. So that's definitely a bonus. And for people who need more than $4,000 to get the kind of place that they want, for example, if you can only afford a $600,000 place, you can now afford up to $900,000. That's a 50% jump with alternative lenders. Now, alternative lenders usually have a bad rap. They're considered loan sharks. But no, there's actually a huge industry now, alternative lenders who have slightly higher rates. In this case, it's now as low as 2.99. If you with RBC or CIBC, a year and a half ago, they were at 3.5 for the most part, right? So you now have alternative lenders offering lower rates than what your local bank had a year ago. And they're a lot more flexible on exactly what you can afford them, as long as you have at least 20% down payment. So definitely ask about alternative lenders and just run the numbers and see if it makes sense for you. Now, for people that own a place and are just kind of like this Jaguar or this kind of Cougar waiting in the background to pounce on an amazing rate, guess what? Every day that you wait and the rates get lower, if you are breaking your mortgage, and let's say it's a fixed rate mortgage where there's a much bigger penalty than variable, the differential in what you got it before and what it's going to be offered at now is bigger, which means you have a much bigger penalty. So you do the math and understand what your biggest penalty will be given the rate today. A lot of people forget that, and actually waiting may not be the best thing. So definitely ask your broker about that. Credit score, the most opaque thing in the world. No one knows how it works. And you might have heard the July-1st CMHC made an announcement that some people are not going to be able to qualify, even with a pretty decent credit score. And I've seen people with credit scores above 700 get rejected because of a past stain, whether it be not enough credit or a past bankruptcy that hasn't been discharged for long enough. Make sure you really understand the nuances of your credit score, not just the score itself, because guess what? You can get disappointed. Now, what's the silver lining of COVID? Well, a lot of people have started to be entrepreneurs. They have side hustles. They're making more income. There's more entrepreneurship. So what does that mean? That means that the lenders are taking notice, and they've kind of brought back something called a stated income program, where a lot of people know that if you write off expenses, you're declaring less income to the government, and you qualify for a lot less. With a stated income program, the lender is a bit more practical about things. Usually it's going to be a B lender, right? An alternative lender that's a little more expensive, right? But they're more practical, and they'll look at your revenues, your expenses, and like you and I together have to put forward a case to, just like Matthew McConaughey here, on why you have a stated income, why your income should be a lot higher and should be looked at more than what you actually declared. So these programs are coming back, and what does that mean? As an entrepreneur, you can afford a lot more, and this is exactly the time you want to be doing that. To conclude, we've had a lot of great case studies, some amazing things we've done with, of course, some of our clients. So obviously get in touch. I'm happy to be a second opinion, give you the straight goods. And guess what? That is it for your Q3 update. I'll see you at the end of 2020, which couldn't come any sooner. Thanks so much, guys.